That new phone, or that smartwatch, or that dream vacation that you've been thinking about. Buy now, pay later makes it feel everything within your reach. No need to make the payments today, right? But what if I tell you that it could secretly be affecting your credit score? Not today, not tomorrow, but right when you need it the most. Fast forward to a few years, let's say you want a loan, and then your loan officer tells you they cannot give you a loan because your credit score is low. And now you are wondering, what is this credit score and why is it important? Let's break it down. A credit score is like a financial mark sheet that tells these bank and institutional lenders that how responsible you are with the borrowed money. It's a 3-digit number ranging between 300 to 900, and a higher number is perceived as you are a responsible borrower. See, if your credit score is high, the banks see you as low risk, and this will help you get loans faster. But if your credit score is low, banks see you as higher risk. It will affect the ability to borrow money, your interest rate, and the entire loan process can be stressful. Now, your credit score isn't just randomly assigned. It is given by credit bureaus like CIBIL, Equifax, Experian, and Hallmark in India. And how it is determined, there are a few parameters. Let's talk about them. Number 1 is your payment history. You need to ensure that you make the payments on time. Let's say that you have to make a payment on 20th. Make sure to do it on 20th. If you're casual about it, doing it on 21st or 22nd, it can affect your score. Number 2 is credit utilization. Let's say you have the limit for 2 lakh rupees. Just because you have the limit of 2 lakh rupees does not mean that you used the entire limit that is given to you. This will also affect the score. Third is credit mix. If you have a healthy combination of credit card and loans, that can improve the score. Next is new applications for loan. If you're frequently putting up those applications, which means that you are financially distressed and you need loan and again, which that is also not a good sign for your credit score. And lastly, final point is your credit length. A long credit history also helps to determine how good a borrower you are and helps to improve your credit score. But be mindful of one thing. Buy now, pay later can affect your score. Buy now, pay later providers give report to the credit bureaus about your financial behavior. If you make delayed payments or fail to make such payments, that is recorded by those credit bureaus, which will further affect the time when you actually want to take loan on something which is important to you. Now you're thinking, okay, what is a good score? Well, every bureau has a separate criteria, but let's talk about CIBIL. For CIBIL, a credit score in the range of 300 to 550 is considered poor, 550 to 650 is average, 650 to 750 is good, and 750 to 900 is considered excellent. Anything below 650, that's trouble. Banks will either reject your loan or they will give you at a higher interest rate. Now you're thinking, why do these credit bureaus have to give you a score? Let's say you want to lend money to your friend. Will you not consider that whether your friend is in good behavior of returning the money or does he make excuses every time you ask for it? Similarly, banks also need to ensure that you are a good borrower and you will repay the money back in time. Also, it's not just the banks that look at your credit scores. There are other institutions as well. For example, housing finance companies before approving home loans, credit card issuers to determine your credit limit. Some employers, especially in financial role, assess financial responsibility. Your credit history is also an indicator of your personality. And lastly, landlords before renting out a property to ensure you can pay rent on time. Fortunately, checking these credit score is simple. You can ask for a report once in a year from the credit bureaus or fintech apps like Zerodha Capital, Paytm, Cred, etc. You simply have to give your phone number and PAN details, and that is where you can have your credit report very easily. Now there is one question that should come into your mind. Checking your credit score frequently, does it have any impact? Well, yes and no, because it depends upon how is the inquiry happening. There are 2 types of inquiry, soft inquiry and hard inquiry. Soft inquiry is when you or your employer checks your credit score for pre-approved offer. This does not affect your credit score. But in case of hard inquiry, that is done by the bank in case you have a loan application that is being offered. If there are multiple hard inquiries in a small period of time, then that can affect your credit score. Therefore, do not check your credit score every now and then. Probably after a period of 6 months is a nice time to do it. But in case you want to have loan, then be mindful of when do you want and why do you want that loan. Because multiple loan application can trigger hard inquiry and multiple hard inquiries can affect your credit score. Now let's say you have put up an application for loan. The bank is going to check your credit score. If your credit score is good, which means the loan approval will be faster, you will get better interest rate and a longer tenure to repay it. Now let's assume that a husband and wife want to take a joint loan wherein wife has a good credit score but husband does not have that a good score as compared to the wife. In this case, their scores will be balanced out and this can actually help them. But in case if the husband's score is very low, then that can affect wife's score as well. Also, if there is a good behavior while the loan repayment is happening, this can positively affect both husband and the wife. Just remember these three things. If your co-applicant defaults, then you need to make the payment. If your co-applicant misses the payment, then that will affect your credit score. Or if your co-applicant is irresponsible in any other manner with regard to this borrowed money, then that will also affect your credit score. But if your credit score has already taken a hit, don't worry. With proper financial habits over a period of time, it can be revived. Let's talk about them. Number 1 is make timely payments. Number 2 is keep credit utilization low. Use less than 30% of your available credit limit. Number 3, avoid frequent loan applications because multiple loan applications in a short span signal financial distress. Next is increase credit limit but not your spending. 5th is monitor your credit reports. Regularly check your credit reports but make sure that you are not too frequent while checking them. Other than that, you can also use these additional smart practices in your financial life. Number 1, be cautious as a loan guarantor. Number 2, opt for longer loan tenures. And number 3, limit new credit applications. Improving your credit score is not going to happen instantly. It might take 6 to 12 months. But if your credit score was quite low, then it might take a few years. But every on-time payment and responsible behavior ensures that you are on right track of your financial behavior. Credit score is not just a number. It's a reputation. If you treat it well, it will reward you with financial freedom when you need it the most. Whether it's for home loan, premium credit card, or just a peace of mind. Good credit score is like a golden ticket. Build it, treat it well, and enjoy the benefits.